Hello, welcome to the advanced market structure. So today we are going to be talking on multi-time frame analysis, and if it's your first time seeing me, consider checking the first video, which is actually on basics of market structure, where you're going to learn everything and the approach we use in making market structure, because if you don't learn that, this one will be very difficult for you to understand. So here you're going to learn a lot of things, and as I told you at the beginning, going through this market structure will actually increase your winning rate in the market, increase your average risk to reward ratio, and approach the market with extreme clarity. And you'll be able to trade the market no matter what direction or where the market is, because you actually understand the structure both at the bigger picture and in the smaller picture. You'll be able to understand any of them, and you understand the mechanical way of how the market is moving. On this video, we are going to be performing analysis on the higher time frame and both the lower time frame, and I'm going to show you how you can actually refine your levels and understand market structure and even go down to the lower time frame. If that's what you have been looking for, then you should stick with me to the end, as I'm about to provide an insane value to you. If you are wondering who am I, I'm actually called Abdel Forex, and I am the founder of Forex Train to Trade Academy, and will help countless of Forex traders acquire consistency and profitability with the power of the systematic trading approach we use in the market, which is actually what I am trying to show you here. So it is something which you don't have to joke with it. So under this multi-time frame analysis, we'll look at what runs and trends are, multi-time frame, strong, weak, high, and lows. Then we're going to look at fractal structure. We're also going to talk about market direction and mastery. So these things are very important. We cannot talk about multi-time frame analysis without mentioning some of these key components here. So without wasting time, let's actually get started. So time is power. We cannot talk of multi-time frame without us mentioning time. Time is actually power in the market. So whatever you want to do, whatever time frame you want to use to trade, you just have to be aware that time is power. The higher time frame will always be stronger than the smaller time frame. So when you want to perform your trade, you use the higher time frame, and you use the lower time frame as well to follow the direction where the higher time frame is going. So the monthly time frame will always be stronger than the weekly time frame, and the weekly time frame will actually be stronger than the daily time frame. The daily time frame will be stronger than the 4-hour time frame. The 4-hour time frame will be stronger than the 1-hour time frame. 1-hour time frame will be stronger than 15 minutes. 15 minutes will be stronger than 5 minutes, and 5 minutes will be stronger than 1 minute. 1 minute will be stronger than 30 seconds. 30 seconds will also be stronger than 15 minutes, and the list goes on. So the reason why I'm saying this is because time is power. Okay, time is power, and the higher time frame leads all the way. Here is an example of what I mean by time is actually power. One weekly candle alone is made up of 7 daily candles for crypto market, and in forex market it is made up of 5 daily candles. Okay, which means that one daily candle, it is made up of 6 4-hour candles. Meanwhile, one 4-hour candle is made up of 16 15-minute candle, and one 15-minute candle is made up of 15 1-minute candle. You can see how time is power. So what happens on the higher time frame holds more weight than what happens on the lower time frame, which is why you cannot trade forex without understanding multi-time frame analysis, because you must know where the higher time frame is going before you can now develop a good bias and trade profitably in the market. A run on a higher time frame is actually a trend on a lower time frame. So this is how the market is always pushing. The market will always make run, pull back, run, pull back, run, pull back, and run. Okay, that's how the market moves. The market will always go push, exhaust, push, exhaust, push, and exhaust. So a run on a higher time frame will become a trend on a lower time frame. Don't get me confused. I'm going to explain this more clearer. So let's look at this example here of what I mean by a run on a higher time frame is a trend. So if you look at this price action here, what are you going to realize? You are going to realize that this is actually a break of structure. This is our strong swing, and this is our weak swing. So this is one run on a higher time frame. Now this one run on a higher time frame is actually going to be seen. This one run on the higher time frame is actually going to be seen as a trend on the lower time frame. as you can see. So this one run on the higher time frame is a trend on the lower time frame. So these are lower time frame price action. If this is actually your higher time frame strong swing, your higher time frame weak swing, and your higher time frame break of structure, and this is the one move, obviously that one move on the higher time frame will actually be facilitated by a medium time frame, lower time frame price action, which is these ones. Okay, you can see its own building, forming its own strong, weak, strong, weak. So this is another higher time frame pullback. You can see this is another higher time frame pullback. Then this is another higher time frame run. You can see higher time frame run being facilitated by what? It is being facilitated by lower time frame price action. Higher time frame pullback being facilitated by what? Lower time frame price action. Higher time frame run is being facilitated by what? Lower time frame price action. So that is why we said a run on a higher time frame is a break of structure on a lower time frame. I already explained this and I don't want to go too deep again, repeating myself on what I already explained. My main focus was for you to know that whenever you have a break like this and you have a strong and you have your weak, when you have a lower time frame break like this lower time frame is actually switching just to facilitate the higher time frame pullback. And when the lower time frame switch again, then it has actually switched just to facilitate the higher time frame run. The same thing here. When the lower time frame switch, it is just switching to facilitate the wide line, which is the higher time frame. It's just switching to facilitate the higher time frame pullback. And when the higher time frame pullback is complete, the lower time frame will actually switch just to facilitate the higher time frame run. So when the lower time frame price action plays out, then when you go up now to your higher time frame, you are now going to see but just one push like this, but which is made up of lower time frame price action. So whatever happens on the higher time frame, it has to print on the lower time frame. That's one of the key terms you need to know when you are trading with multi-time frame. So we now have a trend change here. Our strong is now up, our weak is now down. This one here is just to facilitate the higher time frame counter trend pullback, and this other break here is just to facilitate the higher time frame swing run. This other break here is just to facilitate the higher time frame counter trend pullback with lower time frame structures. Okay, that's how it's done, and the list goes on. We cannot talk of multi-time frame analysis without us getting ourselves back to change of character. Change of character is very, very important, and that is why I've bring back this change of character we have on basics of market structure. But we are now going to be doing it, coupling it with multi-time frame analysis, which is going to make it now more powerful and more accurate. So this is our break of structure, our strong swing, our weak swing, as we already know. So this change of character here on the higher time frame, this change of character is just to facilitate the higher time frame swing pullback, and it signals when the swing run is over and the swing pullback wants to start, and when the swing pullback is over and the swing run wants to come in. So when you have this higher time frame change of character, it is actually signaling to you this higher time frame change of character will be viewed on another time frame lower as an internal break of structure or a swing break of structure, and with that it can be an early signal for you to start trading, facilitating that pullback until when the higher time frame will give another one, then you now go down again and now start trading the internal structure until it goes and take out the weak swing. I'm going to explain this when we go to the chart if it's not too clear enough. You have to understand that the market is very fractal, and that is why we have different time frames. Whatever happens on the higher time frame must repeat itself several times on the lower time frame. It must have repeated itself several times on the lower time frame before happening on the higher time frame. So higher time frames runs are made up of what? Lower time frame price action, which forms higher time frame price action, which actually forecasts all the higher time frames runs. What happened on the higher time frame must first happen on the lower time frame. That is key. So let's talk of some type of fractal structure here. We now have our break of structure, our strong swing, and our weak swing, right? So this one here is our higher time frame. We're anticipating that this should be our 4R. So the 4R structure or the 4R swing structure is bullish, and this is actually our strong swing, swing low, and this is actually going to be like our week swing high, as you already know. So whatever is happening within your strong swing and your weak swing, we already know that it's internal structure based on the knowledge we gathered on basics of market structure. So when you have a change of character on the higher time frame, this change of character on the higher time frame can be viewed as a break of structure. It can be an internal break of structure. It can be a swing break of structure. In this case, this change of character was viewed as a break of structure. Now, this one is signaling the start of a higher time frame swing pullback. So what will you do? You will now go down to your 15-minute, okay? When you come down now to your 15-minute, you will see this as a 15-minute strong swing, 15-minute weak swing. So you just need to wait for price to return to the 15-minute strong, give its own change of character, then you sell and continue. And it forms again 15 minutes strong, it comes back to 15 minutes strong, you sell and keeps following the order flow. Okay, when you now come down now to the discount level of the higher time frame range, then you will start having in your mind that what the higher time frame pullback might be finished and the higher time frame swing run might be coming in. But you cannot anticipate or you cannot reverse the market. You need to wait for it to show you that truly it wants to reverse before you can actually do that. We don't actually need to change it. You have to stick with the bearish order flow which you have. Okay, so you need to wait for it to actually give you that bullish order flow shift, and which is this one, first internal break of structure, which is what you saw on the part 1 of this program. After that bullish internal break of structure, it is a sign now to signal. This bullish internal break of structure could be a swing break of structure since we're on the 15-minute in this case here. Now, so 15-minute has now synchronized bullish, aligning with the information you had on the 4-hour. So they have actually switched and they have aligned with the information you had on the 4-hour. But that's not over yet. So you now have a 15-minute strong swing and a 15-minute weak swing. So what will you do? You wait for price action to pull back again to the 15-minute level. And when it pulls back to that 15-minute level, you wait for what? The 1-minute structure shift again. So the 1 minute have to switch now to confirm that it has aligned with the 15-minute, which the 15-minute has aligned with the 1 hour. So this is how the market is fractal. And if you want to catch high probability trades, this is how you need to approach it. You always need to make sure that all your trades are aligned. The 1 minute should align with the 15-minute, the 15-minute should align with your 4-hour, or the 15-minute should align with your 1 hour if you are 1 hour. Or if you are a swing trader, the daily time frame should align, the 4-hour time frame should align with the daily time frame, and the daily time frame should align with the weekly time frame. The market is fractal. Time is power. If you are trading on more higher time frame, the accurate your trade. But most people are day traders, and that is why I'm using these time frames. But just know that the more you keep going down to lower time frames, the lower the probabilities of how things are going to work in your favor. That's what you need to actually know. When price comes here, you can clearly see that what the 1 minute order flow, this same pattern that has formed here, this is the same pattern here that has formed on the 15-minute, and this is the same pattern that has actually formed on the 4-hour. So everything, all the fractal order flow has aligned. They're in the same direction, and there is a higher chance that from here now the market can now go up and take out the weak swing. If you have been trying to increase your probability of getting good results from the market, then this is the type of fractal order flow you need to wait for the patterns to align. So when a price tests your higher time frame zone, wait for the 15-minute to align with it, then you wait for the 1 minute or whatever 5-minute to align with it, then before you can actually enter, then you are going to make good results. Consistent action equals consistent results. So utilizing a set number of time frames is actually key in actually building consistency. You cannot trade on a single time frame as we have seen already, even on fractal order flow. You must use multi time frames. That is why we mostly use the daily time frame for our higher time frame. The daily time frame could be a higher time frame. It is for your perspective, for you to anticipate what the market is trying to do in a long-term way. Meanwhile, we use the 4-hour now for the narrative. Okay, the 4-hour is like the narrative. It actually gives us what we want to do in a short-term way, and the 15-minute is our immediate bias. We are just selecting now zones to fulfill what that higher time frame wants to do, which is our narrative. And we use now 5 minute, 1 minute, it could be any lower time time lower than that for timing and entries. So this is how you have to approach the market, and you need to do it consistently. You can select your higher time frame to be any of these time frames. It must not only be the daily, it must not only be the 4-hour. That's why I'll even be doing examples using different time frames just to prove more further to you that the market is actually fractal. Know the higher time frame narrative, actively monitor the lower time frame price action, allow the trade to actually present itself to you. Don't try to force things in the market. Mastering the market direction is actually a key which is going to make a very great improvement to your trading. When the market returns to a specific level, you don't have to anticipate that this will happen. You have to be able to work with what is in front of you. Okay, so you don't need to necessarily wait, for example, for price to come here. Since this is our break of structure and this is our strong swing and our weak swing, and price comes here, you are just anticipating that, okay, let me just sell from here because this is a strong. Because obviously the strong is a protected level, and when price reach at the strong, I'm just expecting to sell until it goes and take out the weak. Yeah, that is the framework you are using, but the truth is that you don't have to switch your direction. You have to trade what is in front of you and not what you are anticipating the market to do. That is why relying on the expectational order flow is more better than trying to anticipate for a reversal. So if the market is currently bullish, or if the internal structure of the market is currently bullish and price is coming at the extreme level of your internal swing range, then what you have to do is to either wait for that change of character to signal that truly the market is now showing signs that it wants to go down and take out the weak swing before you start looking now for sell to continue with this idea. But if it comes back to that strong level and fail to give that change of character, thereby continuing with the order flow like this, then you just have to keep continuing with the order flow in anticipation that for the strong to go and for it to become a swing break of structure and for this low to become the new strong swing. So don't predict the market, react to what the market is actually showing you. Without wasting any time, we're actually going to hop up to the chart so that I can bust your brain with some vital technical analysis of using multiple time frames. So here we are on the chart. We are going to continue with the multi-time frame analysis, where I'm going to be showing you now how to use 2 different time frames to perform your technical analysis to understand the direction of the market, because the higher time frame is the key. So in this first example, we're going to be using 1 hour as our higher time frame, then 15 minutes as our lower time frame. This is pure structure. I'm just going to be showing you how it is playing and how you can potentially do to trade following the direction of the higher time frame. So let's actually begin with it. So this is the structure. If you might have been familiar with this structure already, because we actually use this very structure on the first part of market structure. I just want to use it here again so that we can actually understand how to do with multi-time frames and how to handle multi-time frames analysis effectively. So looking at this structure here, you can see down here is our strong swing. As we already know, here is our weak swing. Then we actually have our change of character here. Now, this change of character on the higher time frame, actually, remember I told you it can be an internal break on the lower time frame, or it can be a swing break on the lower time frame. I don't know, but this sign here, this first change of character, that's a sign to signal that truly this swing break of structure has completed and a swing pullback is about to start. But you are not supposed to sit on your higher time frame and you wait for that swing pullback to come in before you buy down here, which is what you were doing at first. If that's what you were doing, then you should stop. You have to go down to the lower time frame and use the lower time frame now to be able to scale in. Since you have already developed, you have already seen a sign that the counter trend pullback is coming in. You have to use now the lower time frame to be able to capitalize on this counter trend pullback until when it will get finished. Then now you use the higher time frame to actually see if the swing run is coming in. Then you capitalize and fulfill that again. So let's actually step down now to our 15 minutes to actually see what that change of character looks like. So here we are on our 15 minutes, as you can see here. So this is that change of character on the higher time frame. Okay, that change of character on the higher time frame now has built this type of structure. It is now forming internal structures on the lower time frame. So this is where the trade idea will be coming from. Since you already know where the market is going to go based on the strategy you trade, for example, me, which I use supply and demand, I will just have to map my level of maybe my supply zones, and I wait for price now to return there for me to actually sell. Now, since I've already seen that change of character on the higher time frame, and I know that since that change of character will occur, there is a chance that the counter trend pullback will actually be starting in the market, which is what I'm going to actually be doing right now. So let's actually see what the market did in this case here. I believe we should be familiar with this price action, because I indeed use this price action just to make us understand. I want to make us understand. So price have pulled back now to the internal strong. Okay, so this level is the internal strong and this is the internal weak. So if the higher time frame have changed character and then the internal strong have started to form, let's try to see the higher time frame. Okay, so this is that higher time frame change of character that has occurred, and that higher time frame change of character has been able to build this clear internal structure on the lower time frame. So there is a high chance that price can lift now from here and go up, and I believe that is the same thing that happened when the market pulled back up here. So I don't really want to be looking at it like this because it's going to be in a hindsight format. I really want us to be playing it using market replay, but I just wanted you to see the change of character itself, which has now built this structure on the lower time frame. So always wait for that higher time frame to give you that direction. Then you actively monitor for the lower time frame price action and you wait for the trade to present itself to you. Okay, that's what you have to be doing. Now, looking at this one, at this price action now here, I can now start anticipating that maybe the counter trend will be starting, and this strong is a protected level. So I'm just expecting price to respect it and continue down. So in this case, you saw how the price returned there. And when price returned to that level now, we just saw how it respected until it came down and break. So sometimes other structures are going to build inside your medium time frame structure range. Other structures, like what type of structures? Internal of the internal structure, which is actually what you is actually building here. So if you really want to know more about these three types of structure and everything, then you can only get that at my mentorship program, because that's more advanced level of market structure. Even what I'm providing to you, if you are somebody that has been into the industry, you actually know that it actually makes sense and you can actually use it to skyrocket your results. But if you really want to know more about all these things of market structure, then you should consider getting my mentorship program, and then you see all these things there. But if you don't have the means to get it, then no problem. Just put your head down and focus on what I'm going to show you, as it's still going to help you a lot more. Okay, we don't have another structure building in here. There is a way which we usually address this, and forming a new level here. You can see how price is actually pulling back now to that level. As price is pulling back after breaking there, then it just come down and go now and form a new internal breakout structure. So all this internal structure is just to facilitate that higher time frame counter trend pullback, as you can see here. So all these ones is just to facilitate the higher time frame counter trend pullback, because this is the higher time frame swing breakout structure. And as we can also see from the Fibonacci standpoint, the equilibrium is right down here. As the equilibrium is right down here, at a minimum, I am expecting price to come here. So if price doesn't come here anytime soon, then I will keep looking for that sell until it gets there. That's where I can start anticipating that maybe the swing run can come in. But so far as the market is above there, then the swing run is not coming in anytime sooner. Okay. After this, I am now expecting another break of structure, which has already happened. So I now have my new swing range. And where is my new strong swing now? My new strong swing now is now this highest point. This is the next highest point that has break like this. So that's my new strong swing range on the 15 minute. Okay, that's my new strong swing range on the 15 minute. I can open it very well so that you actually see it more clearer here. Let me open it very well for you. So this is my new swing range on the 15 minute. So what I know is that I'm just facilitating the higher time frame pullback, and I can just keep drawing levels. Okay, I can just keep drawing levels or based on the strategy I use, and if the market returns there, I just look for a trading opportunity to be able to sell the market. Okay, if it doesn't return there, no problem. If it returns there, I look for it. So I believe maybe on the higher time frame, the market has actually pulled back. Let's try to revisit the higher time frame here and see if it has pulled back more than that equilibrium. So it has pulled back more than that equilibrium. But remember what I told you on market mastery. You don't have to anticipate a reversal until it shows to you that it wants to reverse. And how it shows to you that it wants to reverse? With a change of character. And in this case, on the higher time frame, nothing like a change of character has been built. So what you will do, you just keep looking for the sell opportunities. Okay, you just keep looking for the sell opportunity and keep selling it until when it's going to show you that truly it wants to pull back. So if it doesn't show you, then you just keep looking for the sell. So that's what you are supposed to do in such cases like this, based on the strategy you use. This video is based on market structure, so I'm just showing you how the structure are forming and how you can best capitalize on it. Now we have the new internal swing range. We can see these are internal strong, and this might be our internal weak. It's not yet confirmed, so let's check if it has actually confirmed. If this low has actually confirmed, it was not yet confirmed. It can only be confirmed with a change of character, which is what we now have here. So it is a sign to show that what there is a 15-minute swing pullback. So you can now maybe decide to start buying back the 15-minute, waiting for it to pull back, okay? Because this was a change of character here. This was a change of character here. So you can decide now maybe to buy now the 15-minute in anticipation to pull back to some of these levels. And when you pull back to some of these levels, then you now sell it back and continue with the order flow, since the higher time frame has not yet switched. This is how you do with multi-time frame, and this is how you are able to continue or trade and continue with a single market order flow. So you can see the market will now just return maybe to that supply level, and we just wait for a change of character to confirm that that strong on the 15-minute is to hold. Okay, so while that change of character has occurred, confirming that strong on the 15-minute is to hold, then you can now look for your sell, and you continue down, and you are just facilitating the higher time frame pullback, and you can only wait for that higher time frame change of character. Now it seems as price have pulled back to the strong of that higher time frame, and we now have a higher time frame change of character. So this is the first time to show that what truly that higher time frame swing pullback might be coming in back to this higher time frame internal level, which is actually to this higher time frame internal level. And if price comes to this higher time frame internal order level and you wait for your expectation order flow, if it doesn't show, then it breaks, then you can now continue and go up to that high. But if it doesn't, you just have to stick to the order flow. So this is the first sign. So what will you do? Just go down to your 15-minute. Okay, as you go down to your 15-minute and your higher time frame have shown you the first sign that it wants to pull back, with you, your responsibility is just to draw your level. Okay, as price have already come back to that level, then you just want to continue way up. Okay, you just want to continue going up until it goes to that higher time frame level high, which is up here. Okay, when price gets to that high, which is up there, and it gives you another change of character, maybe you can be looking now to sell and continue with the bearish order flow. You can look now to sell and continue with the bearish order flow right down. So I don't want to really explain or spend more time on this. I just wanted us to understand how we use two time frame analysis. So when it comes now up here, and you can see it just gave the change of character and go down. So your expectation is for it to clear this low. So if the price comes now and fail to clear this low, then you can keep looking or trading the current expectational order flow, which is actually this one, still sell. So you cannot be trying to look for buy unless it goes. Unless that one goes, you can only try to sell, which is from this level like this. You can see how the sell is coming. So that's how you do. I would like us to look at another example now using a 4R. So let's try to look at another example here using a 4R to actually know the expectational order flow in the market. So you can see this is our 4R change of character. These are 4R swing run. These are 4R weak swing. 4R strong swing is right up there. So this change of character is signaling the start of a 4R swing pullback. Okay, it could be pulling back just to this high to continue down. or it can be pulling back maybe deeper into this level to continue down, but you will never know. Okay, but you can be able to capitalize on these things. We already have a first sign of the market reversing. So when you come down to your 15-minute time frame, this is how it's actually going to look like. You actually see that's that 4-hour change of character. Even though the 15-minute strong is still down, but now this is where you now need to understand that the higher time frame can overpower the lower this time frame, because time is power. Higher time frame has more power than this other one. So as time is power, there is a higher chance that this one can be taken or it can be overpowered in the market. So what you just need to do in this case is to wait for the market to pull back like this, because when it pull back like this, it simply means that what? Yeah, it simply means that it has pulled back to the discount level of that higher time frame, which is right down here, and there is a higher chance that it has mitigated a higher time frame level of demand level, and there is a higher chance that maybe price can continue to the upside. So when you go down now to your lower time frame and you identify now a structure shift like this, then it's actually a good sign for you to actually buy, because it's now a change of character, and this is where you could have started buying. And even if you never bought there, maybe you could have just wait for the market to pull back a little, then you buy. Or if you are not lucky enough to wait for that pullback to occur, then no problem. But you have at least been able to capitalize on that higher time frame movement, which you want the market to actually do. So when the market, let's just fast forward it a little. Let's fast forward it a little like that on the higher time frame, and you see. So you can see there's the higher time frame next break. So price have now tested this level on the higher time frame, which is where a pullback can be starting. But you have to stick with the order flow. This is the break here, so you must stick with the order flow to buy and continue up. Okay, that's what you have to stick with. And you can see it bought and it breaks structure, and you can see how the order flow keeps printing. Now we have now pulled back right up here. So once price returns to this level, your objective is always to go down to the lower time frame and look for the structure shift and enter on the lower time frame. You are trading the lower time frame, but the idea is coming from the higher time frame. And what is the idea? The idea is just you facilitating the pullback. So don't always anticipate a different expectation order flow, even when price is at the level of your strong, because you don't know what may happen. We are going to look at a lot of things throughout this program, and with this little information I have passed to you, it will actually help you to make good trading results in the market. So if you really want to have more or know more about market structure in depth, where I'm going to show you everything you need, then you can consider getting to my VIP mentorship program, where I'm going to teach you everything. But if you don't have that means, then just stick to what you have here and see how it is actually going to change your life, because I believe I've passed a lot of information, and some of my students might be angry with this because this is actually information they paid for, and you having it free is an opportunity for you to just type maybe a thank you at the comment section and let me know what topic you want me to cover next, and make sure you subscribe and hit the like button, and pray that I should keep on uploading quality contents like this so that it can help you or make you to achieve consistency and profitability with your trading. I'll see you guys on the next topic. You can look at any of these other videos to actually make an improvement to your trading. As of now, continue to trust the process.